What's up, Bitcoin?
What is going on, everyone? Sunny Decre here. Today I simply want to break down this Cointelegraph article: Bitcoin, Ethereum, Bitcoin Cash, Ripple, Stellar, Litecoin, NEM, Cardano price analysis from January the 27th. Most of you guys probably know already that I'm personally not really a fan of chart analysis, but I want to go over this article and see where I see truth and where I just see speculation. And maybe if we have a closer look, we can benefit from this and see in the future which tools are helpful and which are just useless. But as always, before every video, we're gonna do a $100 worth of Bitcoin. Pay attention, Bitcoin and not Litecoin giveaway. So for those people who are keep posting the Litecoin address, I know that you are not watching the video, so I'm gonna ban you from this channel. So make sure that you post your Bitcoin address. And today the winner is near wins, no much movement after CME after all, right? Well, yes, I agree. Me personally, I expected a bigger price movement. If we have a look at the market right now, since the CME futures expired, the market is going up. But is there a direct correlation? I'm not quite sure about that. Nevertheless, congratulations to your giveaway, $100 worth of Bitcoin. And if you want to participate in all these giveaways, all you have to do is subscribe to the channel and put a topic related comment down below with your Bitcoin address. And now enjoy the video. Alright, now let's get into it. Bitcoin, Ethereum, Bitcoin Cash, Ripple, Stellar, Litecoin, NEM, Cardano price analysis. After the discussions at the World Economic Forum in Davos, the world leaders are getting ready to deliberate on cryptocurrencies in the forthcoming G20 summit in March. Many leaders seek to regulate cryptocurrencies, but if we study the consequences of the Chinese regulations, we find that they have been ineffective. Traders based in China have started trading at cryptocurrency exchanges in Hong Kong. The Chinese government has only increased the risk for the traders because now they are forced to buy Bitcoin at a premium of about $1,200 compared to other exchanges. The leaders and central banks, instead of blindly opposing cryptocurrencies, should chalk out a strategy to embrace them after discussing with the crypto stalwarts. First pair, Bitcoin US dollar. The Bitcoin bulls have been defending the $10,000 mark for the past few days, but they have not been able to push price higher, which is a point of concern. If we have a look at the 3-month chart, we can see, well, that 10,000 was definitely giving us some support. We fell a little bit lower in here, but that catched up quite fast again. The cryptocurrency has broken out of the downtrend line 1, which shows that the momentum on the downside has decreased. We can expect a few more days of range-bound action between $10,000 and $12,000. It is difficult to predict whether the upside or the downside move comes next. If the bulls succeed in breaking out the 20-day EMA, which is an exponential moving average, which is currently at $12,218, the Bitcoin US dollar pair should rally to the downtrend line 2. The traders can wait for the breakout above 12,200 to sustain for about 4 hours and then buy a stop loss at $9,900. The target objective is a move to $14,500. On the downside, if the bears break below $9,900, the selling is likely to intensify. The next stop on the downside is $8,000. As we are uncertain about the next move, we have elucidated both possibilities. We don't find any setups as long as the price remains within the range. To be 100% honest with you, a lot of fancy words in there, but the actual content, well, pretty much zero in my opinion. Let me know your opinion about these chart analysis down below in the comment section. To give you guys my opinion about the Bitcoin price real quick, well, I personally believe in trend and support lines as well, and it is kind of true. If you break through a certain resistance line, for example, the people getting bullish again, people are buying in again, and we have seen already that most of the people, they don't like to buy into a falling knife. Most of the people, they like to buy cryptocurrencies when they are mooning, and that is the reason why, especially on my channel, I'm getting a lot of questions about cryptocurrencies which are pumped already. Alright, but if you want to be a good trader, if you want to make good deals, you should not focus to buy cryptocurrencies which are mooning or which are soaring right now. You should actually buy them when they are down and then take the profits out, so sell them when they are mooning. In our previous analysis, we had recommended long positions in Ethereum on dips to $1,000. Our long positions were triggered yesterday, January 27th. After touching an intraday high of 1,102.4 Therefore, on January the 25th, the cryptocurrency fell to the downtrend line yesterday, January 26th. Now, if it manages to break out of $1,110, we can expect it to rally to $1,174.36 levels. I mean, come on, isn't that kind of ridiculous? I mean, I really want to finish this, but rally to $1,174.36? Who believes that?
What's so?
Once the Ethereum US dollar pair breaks out $1,110, traders should raise the stop loss from the current levels $840 to $950. That will decrease our risk. Partial profits can be booked at $1,170 levels, and the stops on the remaining positions should be trailed higher. I don't really want to bash on this too much right now, but to be honest, I don't really get it how they come up with these levels, and I do not think at all that these numbers mean anything at all, to be honest. Third pairing, Bitcoin Cash US dollar. Bitcoin Cash has a history of entering into small range trading days before a significant breakout or breakdown. We had seen a similar pattern in August and October last year, 2017. Currently, the price has been stuck in a tight range of $1,479 on the downside and $1,700 on the upside. Any breakout of this range is likely to face a slew of resistance at the 20-day exponential moving average, the downtrend line, and $2,072.6853. So that is 68.53 cents. It's really hard for me not to make fun out of this, but I'm trying to do my best. On the downside, support is at the January 17th low of $1,364.9657 and $1,141. We don't find any tradable setup on the Bitcoin Cash US dollar pair. That brings us to the next pair, Ripple US dollar. Ripple continues to trade inside the range of 87 cents and $1.74 with a downward bias. If the cryptocurrency breaks down off the $1.09 levels, a fall to the lower end of the range is likely. This is probably the sentence so far of this article which makes the most sense in my opinion. We have definitely seen a downtrend on Ripple. It's not really recovering again to these pump levels which we saw over here. It's building some support right now. Maybe it starts to consolidate, but overall here I would definitely agree. The Ripple US dollar pair is struggling to find any buyers. Therefore, we should wait for the cryptocurrency to bounce off the 87 cents lows before initiating any long positions. The probable bearish crossover of the 20-day EMA and the 50-day SMA is another negative sign. We anticipate the range-bound trading action to continue for the next few days. I'm personally not really interested in the US dollar value, and I'm not quite sure why they always talk about US dollar values in here, because you cannot buy these currencies with fiat anyway, so why not just do it in Bitcoin? What I'm doing is I go to coinmarketcap.com, I check the Ripple price over here, and I'm always checking the Satoshi levels. So I know currently right now that Ripple is sitting at 11,000 Satoshis roughly, and I told myself that I start thinking about Ripple when it hits a 5,000 Satoshi level, which is obviously not guaranteed that this ever happens again, but this would be a point, even though I do not support Ripple, where I had to say, well, alright, now we really have to think about getting into Ripple with a little bit of a bigger position, maybe one Bitcoin. Alright, let's go to the next pair, Stellar US dollar. Stellar is comparatively stronger cryptocurrency because it is quoting above both the 20-day EMA and the 50-day SMA, and both are trending higher, whereas most other top currencies are witnessing a bearish crossover of the moving averages. This is kind of funny. If the overall sentiment remains subdued, we believe that the Stellar US dollar pair will face resistance at the 67.1 cent mark. Currently, we don't have a suitable stop loss, so we'd better wait for a correction to the trend line before initiating any long positions. Once the cryptocurrency breaks out of the 67.1 cents mark, a move towards the highs is likely with a small resistance at 73.2 cent levels. It might be a good idea to wait for a low risk trading opportunity to initiate fresh positions. Next pair, Litecoin US dollar. Litecoin broke below the $175 support level yesterday, January 26, but recovered and closed above it by the end of the day. What might be worth considering is the fact that the bulls are not able to push prices higher. If we don't get an upside massive range move within a couple of days, chances are that the bears will again attempt to sink the cryptocurrency. On the downside, support exists at $140.50 $0.001, which is the intraday low of January 17th. If this level also breaks, the Litecoin US dollar pair can sink to the next support level of $85. Wow. Alrighty. If the bulls manage to push prices higher, they will face resistance at $200 from the 20-day EMA and at the downtrend line of the descending triangle. We should change our bearish view only if the price breaks out of $225. Next one, NEM US dollars, and this one is going to be interesting because just recently there was that hack which definitely had something to do with the fall of the NEM price. Now let's see if they're mentioning this news in here as well. NEM broke below the 86 cents levels yesterday, January 26th, and made an intraday low of 77.5 cents. However, the bears were not able to capitalize on the breakdown. Today we find some buying at the lower levels. The bulls are attempting to break out of the downtrend line, which continues to be major resistance. Even if the price breaks out of this, we expect the NEM US dollar pair to face resistance at the $1 levels from both the moving averages. The cryptocurrency will become bullish once it breaks out $1.21 levels. We shall wait for it to turn positive before recommending any long positions. Okay, well, there's nothing mentioned about the 500 million hack, but I think that does not really belong into here. I think they're just working with their technical analysis tools, which are, in my opinion, not 100% worthless, but pretty close to that actually. Alright, and now let's get into the loss pairing ADA Cardano to Bitcoin. Cardano again failed to break out of 0.00006 Bitcoin. That's why the buy suggested in the previous analysis did not trigger. The ADA Bitcoin pair is now likely to fall to the 0.00005 levels, which should act as support. However, if this level breaks, a fall to 4,730 Satoshis and after that to 4,070 Satoshis can't be ruled out. We shall wait for a cryptocurrency to turn bullish before recommending any fresh positions. Pooh, that was kinda exhausting, guys. To be honest, I never really read this, and this is the reason why I made this video. I want to pretty much do a live comment because I was not reading this before. This was the first time I was reading it, and there is a lot of stuff which is pretty much senseless. And here is why you should not really listen, or why you should not really care, or why it is a time waste to read such articles. Now, first of all, why is ADA compared to Bitcoin and all the others to the US dollar value? I mean, most of these cryptocurrencies you cannot buy with US dollar anyway. So why even compare them to the US dollar value? I mean, I don't really know an exchange where you can buy NEM for US dollars. Also, what I think, and pay attention right now, this is super weird. They're talking in here about support exists at $140.001, which is super accurate. But now, look at this. The Bitcoin price in here is from HitBTC. The Ethereum price is from Bitfinex. Bitcoin Cash, HitBTC, Ripple, Bitstamp, Stellar, Bittrex, Litecoin, HitBTC, NEM, HitBTC, and ADA, Bittrex again. So I really do not understand this. They're giving us here numbers which are super accurate, which they basically figured out with their technical analysis, but they're not even doing it on all these same exchanges. How can someone take this serious? Okay guys, maybe I overreacted, maybe I'm just in bashing mood, but please let me know. What do you think about that article? I will post you the link down below in the comments section. Alright, this is it already. Thank you guys very much for watching. Please make sure to subscribe to the channel, and I see you in the next video. Have a good one.